In this video, we will be taking few questions relating to the calculation of interest on capital. Like when capital is introduced, when capital is withdrawn, okay, the calculation of interest on capital. When closing capital is given, how to calculate opening capital, and then calculation of interest on capital. So let's start. Now interest on capital, we have already discussed that it is, if question is silent, then interest on capital will not be allowed, and if partnership deed provides for interest on capital, then it will be calculated at the agreed rate and it will be treated as appropriation of profit. So interest on capital is calculated on opening capital balance, okay, if capital is not introduced or withdrawn at the agreed rate. If additional capital is introduced for the particular duration, on that extra amount, interest on capital will be allowed. On the capital withdrawn, interest on capital will not be allowed, and interest on capital is allowed to compensate the partners who have contributed capital in excess of their profit sharing ratio. Rules for providing interest on capital, we have discussed that earlier. Like if partnership deed is silent, interest on capital will not be allowed. If partnership deed provides for interest on capital, but regarding the treatment it is silent, that is, it will be treated as a charge or appropriation, then it will be treated as appropriation, okay. When appropriation is there, if enough profit is there, interest on capital will be allowed, but in case of loss, interest on capital is not allowed. If enough profit is there, then interest on capital will be allowed at the agreed rate. And this one is important: if less profit is there, then available profit will be distributed in the ratio of interest on capital, not in the ratio of profit sharing ratio. And if interest on capital is treated as charge, it will be debited to P&L and it will be allowed even if it results in loss. Let's take one question. When capital is introduced and capital is withdrawn, A and B are partners sharing profits equally. Their capital are rupees 4 lakh and 2 lakh rupees. One partner is introducing capital, another is withdrawing capital, so that each of them have capital at 3 lakh rupees. It's on 1st October, that means after 6 months, okay. And interest on capital is calculated at the rate of 12% per annum. Let's first calculate interest on A's capital. For the first 6 months, it was rupees 4 lakh rupees. So on 4 lakh at the rate of 12% for 6 months, it's 24,000 rupees, okay. 4 lakh multiplied by 12 by 100 into 6 by 12 for 6 months, okay. So 12 is deducted by 12, then from these two zeros we will cut these two zeros, so 4,000 into 6, it's 24,000. Next, 3 lakh is introduced, okay, make this 3 lakh, that means 1 lakh is withdrawn, so from 4 lakh minus 1 lakh, it is 3 lakh rupees, okay, for 6 months. So on 3 lakh rupees at the rate of 12% for 6 months, it is 18,000 rupees. So total interest on capital is 24 plus 18, 42,000 rupees. So A will be allowed interest on capital of 42,000 rupees. Now calculate for B. B had 2 lakh rupees, okay, for 6 months at the rate of 12%, it is 12,000 rupees. Then he introduces 1 lakh rupees more, so it becomes 3 lakh rupees. On 3 lakh at the rate of 12% for 6 months, it is 18,000. So total interest on capital allowed to B will be 30,000 rupees, okay. Now let's go through the journal entries. A is withdrawing capital, so A's capital account debit to cash 1 lakh rupees. B is introducing cash, so cash account debit 1 lakh to B's capital 1 lakh rupees. When interest on capital is allowed, interest on capital account debit 72,000 to A's capital, 42,000 to B's capital, 30,000. This interest on capital is debited. Now to close that, P&L appropriation will be debited by 72,000 to interest on capital 72,000. See, please learn the journal entries properly. These are asked frequently, okay. Now calculation of interest on capital when closing capital is given. A and B are sharing profits in the ratio of 4:3. Their closing capital is 4,50,000 and 2,50,000 rupees. During the year, A and B were their drawings were 50,000 and 40,000. And on 1st January 2020, B introduced, after 9 months, for 3 months they have introduced, B have introduced a capital of 70,000. They earned a profit of 70,000 for the year. Interest on capital is allowed at 12%. See, 12% makes calculation easy. In the board it can be anything, 5%, 6%, 8%, okay. Just now to make our calculation part easy, I am taking 12%. Now first we have to calculate the opening capital, okay. So the formula is closing capital plus drawing minus additional capital minus share of profit. So 4,50,000 plus 50,000, 5 lakh minus 54, it's 4,46,000. In case of A, the opening capital is 4,46,000. In case of B, it is closing capital was 2,50,000, drawing was 40, additional capital 70, and 36,000 was the share of profit. 3:2 they are sharing the profits, okay. So opening capital is 1,80,000. So let's take A's capital. No, his opening capital was 4,46,000. Throughout it will be like that until we give the share of profit. So on 4,46,000 at the rate of 12% for 1 year, the interest on capital is 53,520 rupees. Now in case of B, opening capital is 1,84,000 at the rate of 12% for 9 months, it is 16,560 rupees. Then capital was introduced. So for the next 3 months, it is 2,54,000 at the rate of 12% for 3 months, it's 7,620 rupees. So total interest on capital is 24,180 rupees. Please do the calculation, all of you. Solve this question. And in our book, illustration number 18 to 23, please go through that. I am repeating, illustration number 18 to 23, okay.